please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
This is Bazaar Morning Call, live from the CNBC TV18 headquarters in Mumbai.
The government and the Reserve Bank together has decided to reduce the buyback by about 25,000 crore.
This is a huge positive surprise for the bond markets for the first half.
Most of the issues raised by the market participants have been addressed.
The government has clearly broken away from the earlier pattern of keeping the first half at least about 60 to 63%.
Banks may participate in this market borrowing program, which earlier it was thought of that they may refrain from.
Good morning. Welcome to Bazaar Morning Call. I'm Lata and with me are Anuj and Sonia. You may be wondering why we are starting with a domestic band of quotes when the US markets have fired up by over 600 points and Asian markets are kind of following at least a third of the gains that Wall Street showed are there in the Asian markets. Well, there is a reason. Today we are going to run on our own steam. The global market is going to be the icing on the cake, but we have enough legs to run on the basis of the government borrowing program. The government has going to borrow 30% less, okay, let me make it precise, 22% less actually than what it did a year ago in the April to September period. This is a huge surprise for the market. It was expecting a monster borrowing program. Not just that, it's also going to borrow more from a shorter term paper, 1 to 4 year paper, which didn't exist all these years. All these years you borrowed largely 5 to 9 and maximum from 10 to 15. And there is no appetite for 10 to 15 because it results in mark-to-market losses. So this reduced borrowing program in the 10 to 15 bracket, there the amount is being cut by about 30%, is going to be a huge bonanza for the banks. Obviously, if there is less bonds on offer, prices of bonds rise. So there is a very good chance today that the yields will fall to 7.4. Bond prices will rise by about, 1 rupee 50 pice or, 1 rupee 60 pice. And, you're multiplying this by 10 lakh crore of bonds held. So for the banks, a 10,000 crore of gain in their bond portfolio in a single day is almost a given. And therefore, a bond rally translates into a bank rally. Not so much private banks because they don't own excess bonds, but certainly the public sector banks, which have, against an asking of maybe 21% or 24% if you add LCR, they hold 30%. So they have a huge amount of excess, and all that can be written into in terms of a bond gain. At least their bond losses reduce hugely. And then, of course, NBFCs, for them, the wholesale cost of funds falls. All told, with the global rally giving you probably a push for metals and other stocks, banks will just take the leadership. And today a bull can be very happy.
Okay, good morning, Lata. Good morning, Anuj. But do you think a lot of it happened yesterday? Because the Nifty Bank rallied almost 300 points yesterday. You think perhaps a lot of the juice could be out?
Well, it's very tempting to think that this is a conspiracy. Somebody was in on it, and that is why they bought the bank stocks. But then why didn't the bonds rally? I mean, the bond yield ended at 7.6. If you are that clever, would you also not bring down the bond yield? Bond yield actually ended higher. From 7.57, it went to 7.62 because there was state government borrowing, which didn't go too well. I mean, for today, I'm not buying that conspiracy. I think yesterday the Indian markets rallied because European markets also rallied in the second half. The thaw between the US and the Chinese trading, negotiators was already evident yesterday. We quoted that Wall Street Journal article which said that China and US are going to meet. My sense is that yesterday we were rising on the tailwind of an expected thaw, which ultimately happened. And today we have fresh reasons to rally because of the bonds.
Okay, well, yesterday we had that huge short covering bounce, good global cues as well. And we had some solid DII buying yesterday, almost 2,000 odd crores. Anuj, morning. What's the sense you're getting about today? We saw a lot of it play out yesterday. Do you get a sense that it could continue today, or is it going to be a bit tricky?
Yeah, morning, Sonia. I think the first half should be good. I think the SGX Nifty is getting it wrong. It sometimes gets wrong, and I think we are in the last lap of the SGX Nifty. So obviously that could be the reason as well. But I don't go, one bit by what the SGX Nifty is indicating, that we'll have only about a 15-point gap up. The kind of market we are in, the kind of closing that we had yesterday, and the kind of global cues that we have, I think it's a given that we will have a better start than what the SGX Nifty is indicating. Keep in mind, we closed at a premium yesterday. So the, my sense is we might start somewhere around the 10,175 to 10,180 mark on the Nifty. That's distinctly possible. Yesterday there was big domestic short covering, but not from the FIIs. And after the kind of rally that you had yesterday, about 130 points yesterday, and a further 60-70 points that could happen first thing in the morning. So about 200 points in a matter of a day and bit. The risk reward would once again not be in your favor to take fresh longs this morning. Look, the market, time to buy the market was yesterday when there was a bit of a despondence in the system. That's right. Today with so much cheer in the market, perhaps it's not the good time to buy. Also, this index future selling by FIs is continuing. Yesterday also 2,000 crores. And once again, if you see I don't know why there's so much shorts being created. Yesterday you thought those would be covered, but yesterday there were fresh 16,000 shorts. And right now we are sitting at a record low of 33% longs from FIIs. So even yesterday's rally from FI side at least was sold into. You saw it in cash, you saw it in the futures as well. I think the best play today, just for the day, would be the global metals because of what Donald Trump's tweet is there as well this morning. And of course, obviously, Chetan here was making this point that things are not as bad as they look right now. And I think if you see Donald Trump's tweet, he's talking about the fact that the negotiations are going on well with the countries that have treated United States fairly, and in the end everyone will be happy. That is what the key point here is, that in the end all will be happy. So and metals in general have been in a global bull market, so that may do well. On PSU banks, my only problem with PSU banks is that they had a big rally yesterday and they are in a bear market. And we saw the biggest of the positive, which was the recap, and after that you saw that that rally was completely and totally sold into. So while I completely take Lata's point that there's obviously going to be a big rally in the PSU banks today. I'm not sure if it's going to be sustainable though, because between yesterday and today, then the rally would be huge. And there are so many people, and even smart money who's stuck in PSU banks who would look to bail out on rallies, because you don't know what next would come out in PSU banks. So that's for the day. I think metals could be a more secular play today compared to other stocks. On the Nifty and Bank Nifty, I think at today's high, we just want to see if the market is sustaining 10,180 or not. If it fails to sustain about 10,180 or so, the short covering bounce could be coming to an end.
I take your point that a lot of even HNIs are stuck with PSU banks, and it's possible they'll use the rally. But my sense is that FIs normally move on macros. And today we have a change in the macros. This is a macro tailwind that we have, because what happens is when yields fall, banks will have to reduce their MCLR, or at least they cannot raise their MCLR. The rise in interest rates fall, and therefore, you will, if what ultimately encourages credit offtake, a lower cost of money. So when FIIs see a lower cost of money, my sense is that there could be short covering at their end. Then we are in for something bigger.
Okay, well, let's see if we still have a long day to go ahead. Let's take a look at what our wise experts have to say as we head into trade this morning. Remember, the big Q really is on the macro front, so we've got some news there. Neelkan Mishra of Credit Suisse says if bond yields fall 25 basis points, PSU Bank's capital erosion due to treasury losses eases. He said the downward momentum in yields can also shift financial savings to bonds, warding off some concerns on crowding in H2. He likes SBI, Shriram Transport as beneficiaries. He says several NBFCs may benefit too, but are expensive or have credit risk.
Okay, so clearly he prefers banks to NBFCs. Money market views, this is the big one. Not the rupee as much as the bonds. Bhaskar Panda of HDFC says risk appetite has made a comeback after trade war shocks were absorbed by the market. He says this has rubbed off on the USD INR pair along with other Asian currencies. Expects another day of consolidation in a range between 64.80, 65 for the day. But I really want to see what he's saying about bonds. Bhaskar says the central government has declared its borrowing calendar, which indicated that the government will raise around 2.88 trillion rupees in the first half of next fiscal. Bhaskar says though the 10-year benchmark bond yield had tightened and moved past 7.61, he expects it to stay within range of 7.55, 7.6. Well, I think that's a very modest expectation. I mean, I can. Yesterday we had almost everyone expecting 7.4 to be reached sometime today.
Okay, so perhaps a further fall is what we're going to see in yields this morning. But let's talk about the global markets. Things have been looking pretty good. In fact, most of Asia is also higher. Mangalam is here for the world view. Mangalam.
Indeed, things have been looking good for the global screen. So after the lovers tiff that US and China had a bit of makeup out there, so the Dow Jones up close to around 670 points. The S&P recovered from the 200-day moving average and the Nasdaq too gained. In fact, the Dow Jones actually posted the best trading day since August 2015, the third best trading intraday trade rally that we saw on the Dow. Why was that? Well, because trade war fears have eased a bit. Financial Times reported that China is likely to go ahead and buy more semiconductors from the US to narrow that trade surplus gap. Wall Street Journal also reported that officials are working to improve US access to China's markets. Add to that, we got Donald Trump's tweet that everyone in the end will be happy. As a result of that, the CBOE WIX, which is an indicator of the fear, abated by about 15.5%. And the gainers out there, we had Microsoft, Apple, Amazon, and Intel and Qualcomm gaining on the back of China reports of buying more semiconductors. The one stock that was missing out there is Facebook, the erstwhile FANG stocks, which usually used to lead the rally. But across the European markets, they shut before the US market started rallying. So we still saw some red tick out there. The futures, however, are showing green ticks. In the periphery, the only index that stood out was the ATHEX because Greek banks were doing well yesterday. The Russian index, after doing well yesterday, a day before yesterday rather, fell about 2% in yesterday's trading session, fell to about a month's lows because of mining and telecom stocks leading that index lower. The Asian markets, as you said, most of them in the green. However, the SGX Nifty does not share that sort of optimism. It's up only by about 10 to 15 points. Let's see how trade pans out.
Okay, well, thanks a lot for that, Mangalam. It's quite possible that we presaged part of the rally yesterday, so let's see. But let's get an expert to parse the borrowing numbers to us. The big story of this morning, the surprise bonanza for the money markets, lower borrowing in the first half of FY19. Manish Vadawan, Managing Director and Head of Fixed Income at HSBC India, joins us. Good morning, Manish. Thank you very much for taking our call. What do you expect the bonds might do today?
Morning, Lata. It's been a real positive development in terms of the announcement which was made yesterday. And, the biggest surprise has been, first of all, the reduction in terms of what they're going to be borrowing. Last year's number, first half was 3,72,000 crores and its first half is 2,88,000. On top of that, the bigger thing is that 10% of this number would be borrowed through the inflation index bonds and the FRBs. And finally, they have, the government has heeded to the demand from the banking community that for the last 6 months, duration has been very high in the system and market is not able to absorb. They have also readjusted in terms of the tenors which they have, which they'll be issuing. So if you look at it, a reduction of the tenor, which is the prime tenor of 10-year, has been reduced by nearly 50%. And introducing the short-end tenor also in the borrowing program adds to all kind of positivity. So net, I would say to conclude this part that we expect definitely yields to be down 10 to 15 basis points. How will it finally pan out? I think it will depend on post-policy. But today, yes, the reaction could be around approximately 15 basis points. It could go, a bit higher or a bit lower, but that adjustment should happen today.
Okay, let us assume that 1 rupee 50 paise is what the bond prices rise by. Then what is the gain for the bank book? I mean, what is the AFS book for the banking system generally? I think banks have 40% of the total Government of India securities. What might be the excess that can benefit from this? Just a number for the industry.
Lata, I think the context would be that last quarter, the AFS losses were around between 15 and 20,000 crores. If theoretically the rally happens around 15 basis points today, there's a combination of factors which will come into play. One is the 10-year benchmark, which is a barometer for pricing in state government loans and a lot of other bonds. And the other is the price of securities itself. The only guess at this moment I can make it is that these losses would be less than half of what they were in the last quarter.
Okay. So again,
at around 745, 7.5 levels on 10 years.
Okay. So some 10,000 crore of gain, you would say?
No, I said the losses.
I mean lower losses. That's what. Yeah.
Lower losses. So I think it should be even. It could be even lower. Because the valuation is not only the 10-year benchmark. It is the securities are priced at their own prices. So all the securities are marked at the market prices.
Sure.
10-year benchmark is important to mark to market the portfolio, which is very large, which is the state government bonds.
Okay. Well, what would your guess be in April? Do you think we go towards 7 quarter? That's what some people were saying yesterday.
Lata, it's difficult to hazard a guess. I would again reiterate, we will have to wait and watch what the policy stance is. I'm not denying that this is a very, very positive move. So the supply, has been curtailed quite sharply in terms of long end supply, in terms of duration, and in terms of the overall quantity also. From here on, I think, as I said, policy is important. Second thing would be how do the international markets behave? And if you look at oil, if it is trading at above 70, all these things are going to play.
Sure.
From a borrowing point of view, I don't deny this fact. It's a positive development. But giving a number of 7 quarter or 7 or 735, I really don't have an answer to this.
Okay, Manish, yeah, sure. Yeah. Thank you. We'll leave it at that. Thank you for joining us and giving us your thoughts. So bond yields could fall 10 to 15 basis points today. And the losses that banks see because of the bond portfolio, that could reduce by half because of this positive news flow. This morning, we are heading into the market with some positive cues. The SGX Nifty is good. Global cues have been good. Our own markets, of course, had a great run yesterday. Let's see if that holds today. But there are plenty of stocks to talk about. I must also say plenty of impending deals that might see fruition today. So let's wait and watch. For now, let's get you the list of top 10 stocks to watch for the day. Anuj, what are you looking at?
Okay, and Sonia, before I start that, yesterday on a day when the market rallied 500 points, advanced decline was in favor of declines. We should not forget that yesterday. So essentially, the rally that you will see will be driven by large caps. And there could be some bit of mid-cap distribution, because I refuse to believe that we've just ended a correction and we're moving on. We're just seeing a bit of a counter trend move here. So focus on large caps. I think Tata Steel is a stock which ended at high point yesterday, 200 crores of delivery buying, and in general because the global metals mode is good, that could do well. NCC, big delivery buying yesterday. It bounced back from below 20 and 50-day moving average. Short point here is stocks which are essentially in a bull market but have seen correction are the ones you should focus on instead of just all kind of stocks in a market like this.
No, I take your point that we should not assume that this is back to a growth story, simply because now there is a genuine fear about India that governments don't want to be seen helping industry, simply because everything is taken as, cronyism.
Yes.
And that is a big problem for industry to take any decision one way or the other. We should not lose that macro backdrop. But within that backdrop, there is a positive for the banking stocks in terms of the portfolio gains because of bond prices rising and therefore lower losses. Whereas they were prepared for 20,000 crore of losses, it's going to be 10,000 crore. So the big gain will be for public sector banks which have excess bonds. And because the cost of borrowing will fall, NBFCs should also have a positive. I would put private sector banks lowest in this because they don't have excess bonds.
Okay, well, we'll watch out for them. Remember, yesterday names like SBI rallied about 5% so let's keep an eye whether there's any follow through today. But global metals have been moving quite a bit. Nigel joins in to tell us about the stocks to watch today. Nigel?
Well, Anu just mentioned Tata Steel, so we'll keep an eye out on some of these metal stocks. Remember, the metal index is down nearly around 17.5 to around 18% from the highs that we saw earlier this year. We'll keep an eye out on that because global metal prices have corrected in the month of March. And Manisha was saying that some of those metal prices, that's ferrous as well as non-ferrous, have bounced up by around 0.5% to around 1%. So we could see some shorts covering up. And in fact, you could see some of these stocks move higher in today's trading session. Tata Steel, Vedanta, Hindustan Zinc, all of them could move higher in today's trade. Late last week itself, Trump had included more number of countries to the exemption list. Even Korea was included. So some part of that as well, the street would start pricing in. Back to you.
Okay. Thank you very much. Metal stocks also to be on your radar because they'll be the vanguards, the carriers of the global bonhomie. Abhishek, ICICI Bank will not participate in the bank rally?
Well, Lata, ICICI Securities was undersubscribed yesterday, and to the extent that along with Anchor Investment, the total investment was at 88% of the IPO. So they have downsized the IPO size to about 3,520 crore from the earlier 4,017 crore that they were expecting. Let's look at the subscription detail, which was on NSE last night. The overall subscription came in at 78%. QIB participated and they were at 104%, HNI at 36%, retail at 88%. Their own shareholders, ICICI Bank shareholders, were at 34% only. So lower subscription of ICICI Securities can impact the stock in trade today.
Okay, thanks a lot for that, Abhishek. Well, moving on, it seems like the Fortis deal with TPG will finally come through very soon. We reported about an asset sale last week, and that could be announced very soon by Fortis. Nisha, who's been tracking the story from the beginning, joins in to give us the latest on that. Nisha, hi, morning. What are you picking up?
Good morning, Sonia. Of course, from the word go, we have been at it, and we are the first ones to also report that TPG Manipal is back in the fray, and now they are close to really announcing that particular transaction. Today or not, we are just about getting that confirmation from all the parties related, because this has been really been at the signing point for last many days is what we gather. What we had reported, and I'd reiterate, is that it is not a buyout of Fortis Healthcare as a listed company to avoid any sort of legal risks and liabilities coming with Fortis Healthcare. It is going to be an asset sale, but it may also involve a demerger of the hospital business of Fortis Healthcare. So basically, we are talking about RHT, which is a listed trust, which will be also bought out and delisted, and SRL, which is the diagnostics chain. So these two are likely to be bought over by TPG Manipal.
Okay, thank you very much for that. It's possible that because it gets out of F&O ban, it gets into F&O ban, they want to announce it today. Let's see if that big deal comes in today. Also, Canfin Homes deal, we were expecting it yesterday. Abhishek, what have they told the exchanges?
Well, Lata, news reports suggest that Baring Asia Private Equity has pipped over SDFC Limited in acquiring Canara's bank stakes in Canfin Homes. Now, Baring may have to make an additional offer of about 26% of stake in Canfin Homes. So there can be a negotiation of price today. While we have not verified this news independently and does not vouch for the authenticity of the source.
Okay, thanks a lot for that. Let's see who eventually gets Canfin Homes. Whoever does is getting a very good asset, as we know, one of the best asset quality in the home finance space. But more on stocks that are in the news this morning. Sonal joins in to tell us more. Sonal?
Thanks a lot for that, and I have more of positive news today. I'll start with all the order wins. Well, Punj Lloyd, that has won an EPC project worth 505 crore in Odisha. KNR Constructions, again, it has won 2 HAM projects from NHAI for a total cost of around 2,900 crores under the Bharatmala scheme. Dilip Bilkon, it's raining orders for Dilip Bilkon. It has been announced as L1 bidder for 4 HAM projects for a total cost of around 4,000 crores. In this month itself, it has won around 10 orders totaling up to 20,000 crores. So that stock is definitely on our radar. Dolphin Offshore, the consortium has won an order of around 154 crores from ONGC. Now moving on to the pharma stocks. Now Wockhardt, one of their arms, has received US FDA nod for oxycillin sodium injectable, which is used for treating bacterial infections. Even Aurobindo Pharma has received tentative FDA nod for emtricitabine capsules, which is used for HIV infection. All these stocks will be in focus today.
Okay, thanks a lot. So plenty of stocks to look at. Let's just do a quick recap and then talk about the big story of the day once again. Stocks expected to gain today: SBI, PNB, Bank of Baroda, PSU Bank Index, NBFCs like M&M Finance, L&T Finance, Bajaj Finance, Shriram Transport, Tata Steel, Vedanta, Hindustan Zinc, NCC, Fortis Health, Canfin Homes, Punj Lloyd, KNR Constructions, Dilip Bilkon, Dolphin Offshore, Wockhardt and Aurobindo Pharma. While the only stock that could be under pressure this morning is ICICI Bank because of the news flow that we just spoke about.
Absolutely. Well, actually, we're getting back to the big story, the bond story. This morning, the government, as we have been telling you, released a borrowing plan for the first half which was a good 22% less than what they borrowed at the same first half of FY18. We have Mr. Dinabandhu Mahopatra, the Managing Director and CEO of Bank of India, joining us on the phone line. Good morning, Mr. Mahopatra. Have you done the calculation? If the bond prices were to rise by 1 or 1 rupee 50 paise, what would be the impact on your P&L?
Very good morning, Lata. It's a very good move at the right point of time. Okay. All banks will be benefited by this, and I expect around 20% rally in the bond today. Okay,
if it is a 20 basis rally, Mr. Mahopatra, what is the advantage to a bank like yours? What is your, HTM book, and what is your AFS book? And therefore, I mean, more importantly, your AFS. So, do you have a ballpark figure as to how much your losses will reduce?
So exactly the number I have not calculated, but it will be around 50-60% improvement on the provisions on market this time. 50-60%
lower provisioning is what you are expecting.
Yeah.
Sir, for the industry as a whole, do you have any kind of idea? Because we were just speaking to an expert earlier on, and he indicated that, there is an expectation that the bond losses as a whole could reduce by half for the industry. Is that your view as well?
Yes, because this time the declaration having other information also, like government initiating to go for FBI limit increase, and then resource mobilization from small savings. So many other things, positive news are there. So I think almost all the banks will be benefited to that extent.
Will this have an impact on the MCLR? I mean, if bond yields go to 7.4 or whatever, will further MCLR increase stop?
No, right now, maybe it will take a little time, but maybe in course of time there will be some impact, but immediately may not be there is impact.
Okay.